Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Well, if you're driving your car and you need to fill up on gas, what do? You go into a gas station, right? But what if you're driving an electric car? How about an electric charging station? Sounds like a no-brainer, right? Well, here, my guest today is Michael Farkas. He is the CEO and co-founder of the Car Charging Group. It sounds like a no-brainer. I mean, when we need gas, we got to pull into a gas station. But now, with cars becoming more and more electrified, it just seems natural that we're going to need to pull into electric charging stations, right?
Correct, yes.
So that's your company.
That's exactly what we do. And right now, that is probably the biggest hole in the entire industry, is the lack of infrastructure for charging.
But how can that be? Because it seems like such an obvious thing, right?
Exactly. You need gas to fill up your car. You need electricity to fill up your EV.
So talk about how you're rolling this out, the costs involved, long term. How many stations like this are we going to see? How long does it take? How many cars can it service at one time?
Okay. First of all, it's a growing industry right now. There's a lot of different technologies that are coming out to fill up the cars. There's different cars themselves. We see the new Tesla that's come out. We see different product from Chevy, the new the Volt that came out. We see BMWs that are now entering the marketplace. Across the board, you're going to see a lot of different product from a lot of different car companies. The one thing that all of them are missing are filling up the cars. And what we've done is we've partnered with property owners throughout the country, such as Walgreens, Simon Properties, all of the major parking garage companies, from Standard Parking, Central Parking, Icon Parking, Laz Parking. And what we do is we provide their locations with an EV charging solution, where we come in, we install the hardware, we own and maintain the hardware, we insure the hardware, and we provide a network of charging stations so that EV owners can charge their car wherever they work, live, or play.
Okay, so that's the difference, basically. It's like when you park your car in a parking garage, it's not like you drive in and you drive off filling up, because obviously it takes time. I mean, a cell phone will take an hour to charge up. So people come in, they leave it at their parking garage. These parking garages that you have contracts with, they provide the hardware and you plug in.
Correct.
So, but the prospect for growth here, it seems enormous to me.
It is massive, and I have to elaborate a little bit more. It's not only going into places where you're parking your car. We have new charging stations that we're installing in partnership with Nissan that are called DC fast chargers, and you could charge your car about 80% of the charge in about 30 minutes.
Really?
So you could drive along the highway.
Quick.
Yeah, it's pretty fast. You could drive along the highway,
have a cup of coffee.
Exactly. Relieve yourself, have a cup of coffee, and boom, you're on your way. You could drive your electric car. We're doing stations like that in the Walgreens types of properties, where the average stay is about 25-30 minutes, getting your drugs, getting your prescriptions, getting ancillary needs that you have at a Walgreens. And there's different types of solutions for different types of properties. When you come home at night and you leave your car there and your car sits there for 10-12 hours at a time, it doesn't really make a difference if it's charging short-term or long-term. So you could plug in your car, and whether it takes you 3 or 4 hours to charge your car, it's fine. But if you're in a rush and you're driving along the way, you can find a Walgreens, you can find a CVS, you can find a location where you can charge your car very quickly.
Now, the one thing that stands out, I think, is that I think we've crossed that psychological threshold where, in the past, electric vehicles, it's been kind of almost faddish. But now it's really starting to happen, not just in the hybrids, which, are ubiquitous, they're everywhere, but in 100% electric vehicles. Correct?
Yes. What we're seeing, actually, and most people don't realize, is the uptake of EVs is even faster than the uptake of hybrids. In the first 2 years of EV sales, we had the Chevy Volt and the Nissan Leaf. And the first 2 years of EVs, we had the Toyota Prius and the Honda Insight. There have been more EVs sold in their first couple of years of sales than hybrids were in their first couple of years of sales. So we see the uptake is happening much faster than most people expected on a hybrid to EV basis. And most people just don't realize that. But what we are seeing is a graduation from people who want plug-in hybrids that allow them to use electricity for an extended period of time, but have a backup. So they could drive more than 100 or 120 miles or even 80 miles or 50 miles from some of the other plug-in hybrids. But Tesla has really changed the game here. They have a car that goes almost 300 miles. And when you're comparing it to its peers, the Tesla Model S, what it's really comparable to is a Mercedes E-Class or a BMW 5 Series. If you look at the top of the line...
That's high performance.
That's definitely high performance.
Yeah.
But if you look at the top of the line... M-Series BMW or the E-Class AMG Mercedes versus the top end of the Tesla is actually cheaper and it outperforms its peers. So the electric car on that end of the market is already cheaper and it has better performance. And what's going to happen is it's going to trickle down. As more and more cars are made, things are going to be commercialized, the inner workings of the car are going to be commoditized, and the prices are going to drop considerably. GM recently announced that the Volt that they currently sell for is now going to be selling for over $10,000 less and have better performance than the last version. So we're seeing the prices coming down. It's very important.
Now, who are the main manufacturers of the charging units? What you use and you install in whatever, the garages or your service stations, what companies manufacture those?
The main manufacturer that we work with is a company by the name of ChargePoint, and they're located out of California. We're also working with GE now, Siemens. We're in discussions with. We're pretty much talking to every single manufacturer out there. What we saw initially was first-to-market companies, proving that the model works and there's a business here. Now you're starting to see the majors enter the marketplace, and I think the whole dynamics of what's happening in the hardware vendors is going to change in a very short period of time.
So, in terms of your costs and what you charge, customers to refill, so to speak, how long does it take for you to amortize one of those units?
Okay, if a unit is being used to capacity, we're talking in 3-4 months.
That's fast.
That's fast.
Yeah.
We have some units that don't get used at all because there's no EV sales in those areas, but we did that because, it's almost chicken and egg. You put infrastructure, people buy cars. If there's no infrastructure, they feel very uncomfortable buying cars because they don't know where they're going to charge their cars.
Right.
So in certain times we work with Walgreens and we work with locations that we feel by sprinkling infrastructure in there, it allow more people to have confidence in buying EVs. But if you take locations that are being used heavily, like San Francisco, like Los Angeles, like here in New York in certain locations, I got a picture from one of our managers where it showed 2 Teslas, 2 Volts, and 1 Leaf, and we only have 1 charging station in that location. So obviously that location is being used to capacity. But we have other ones that aren't. But if you have a unit being used to capacity, it's months. On average, I would say right now it's probably about a year or so.
Now, there are not a lot of people doing this, but at the end of the day, what you're selling really is a commodity. And if you look at an analogy of, I started, when we started this interview, I talked about gas stations. Gas stations operate on razor-thin margins. Eventually, there's relatively low barriers to entry. People are going to come in. So you have to scale up pretty rapidly, don't you?
Correct. I mean, we're in a very lucky position. We've been doing this for almost 4 years. People thought we were out of our minds when we started this business, and we were actually thrown out of people's offices. I had one guy who...
You had to raise money for this?
Yes, we've raised a decent amount of money, but...
What was the initial reaction?
Initial reaction, I'll give you one of them. We had a guy who's one of the largest property owners in America, known as one of the most successful property owners, and... when I mentioned, literally within 3 seconds of explaining my electric car infrastructure program, he stopped me and he said, "Michael, I just have one question for you. Are these cars going to be flying into my parking lots?" At that point in time, when there was no Chevy Volt and there was no Nissan Leaf and there was none of these cars available, an electric car was as realistic as a flying car. And now that's changed. And I'm not kidding. We were literally thrown out of offices, people thinking that we were nuts. We were lucky enough to be called back afterwards. Once the Volt came out, once the Leaf came out, once there were Teslas out there, and guys actually said to us, "Hey, you're not quacks. You guys are pioneers." And really what we've done is by signing the relationships that we have long-term exclusive contracts with our property owners. We put a unit in the ground. That property owner partner, that location is ours for almost 21 years. These are long-term exclusive contracts. Right. So by having that first move advantage, we've really been able to capture a lot of property.
It's definitely good to be able to strike first, but what would stop or preclude, for example, a Walmart or a Kroger supermarket? They've got tens of thousands of parking lots and millions of customers.
It's good that you asked that question. A lot of people sub out a lot of the businesses that they have. In front of Walmart, there are other vendors that provide other services that Walmart then receives some of the revenues from. They're not operators of technology like this. Property owners, the major property owners, they don't manage even their washing machines and maintain them, let alone are they going to manage and maintain charging stations. They sub that out to companies that operate these certain services for them. That's exactly what's happening here. People don't want to be in this business because they don't know it. It's not familiar to them. They don't understand it. They don't want to take the risks. They're not first to market type of guys. What we've been able to do is get into those locations now, provide them the services. They've been very happy. They call us up every time they have a tenant or a client that has an EV.
Yeah, I'll tell you something, just kind of as an aside, this speaks volumes for electricity demand, and, you know, as a former commodity guy myself, natural gas, it's got no place to go but up, right? Electricity generation.
Bottom line is, if this business is successful, the power companies, the power producers are going to take the places of the ExxonMobil.
So that's the stocks you got to buy right now.
Right now, if you're looking for a pure play in our industry, I think we're it. If you're looking at the broad-based end,
publicly traded company?
Yes, we are a publicly traded company. Our symbol is CCGI. We trade on the markets. We're actually looking to go through an uplisting. I've met with some of the people in this building earlier, we believe that if you're looking at a pure play EV service provider, we're the, I would say, the game in town. If you really believe in the industry and look at, 5 and 10 years down the road, I believe a lot of these energy producers are going to have a lot higher values than they do today.
Wow. Michael Farkas, incredible. Thanks for coming on the show.
Thank you for having me.
That's it, folks. That's it for now. This is Mike Norman. We'll see you again next time. Bye-bye.